How can you afford to travel so much, Kris Krohn? Like, don't you have to work once in a while? Listen, today I'm in Sedona. I'm with my family. I'm always traveling all over the world on my private jet. And the reality is I'm able to do this because of advice I got from Warren Buffett. Today, I'm going to share the 4 most important pieces of financial advice that I've learned from Warren Buffett and how it's created a lot of wealth for me.
One shot, now the future is yours. Go!
If you're studying the life of Warren Buffett, it's probably because you want to be wealthy. He is, after all, one of the most successful investors of all time. And one of my beliefs is that if you want to be wealthy, you need to learn from people who are. Sometimes a really great financial mentor is available to you. You have their cell phone, you can text them questions, you can call them on the phone, you can meet at their house. And then there are others that are so successful, they're a little bit more untouchable. Warren Buffett, because he's one of the financial greats, I thought was worthy to learn from. And let me share with you what I've learned from him. Warren Buffett, born in 1930, is an American business magnate, investor, and philanthropist. Buffett founded Berkshire Hathaway and became one of the richest people in the world thanks to his extraordinary skill as a long-term value investor. He's currently worth $111.9 billion. Did you know that Warren Buffett made his first billion in his mid-50s? I've been following him for the last 14 years, seeing if I can beat that track record, see if I can do it faster. And there's 4 things that he's taught me as a long-term value investor that I believe has helped me build more wealth than any other advice I've ever gotten before. Psst, Kris, what's a long-term value investor? Well, that's someone who owns a piece of a company early stage so that long-term as it grows and has a huge asymmetric rise, meaning really big upside, not a lot of downside, you end up making a lot of money. Before I share these 4 investor tips with you, let's be really clear on something. Warren Buffett is really big into investing in companies. I've been really big in my past investing in real estate to the tune of over $2 billion worth of single-family home transactions, over 6,000 deals. Warren Buffett, however, has still been a great mentor to me both in real estate, but even more so in the game of business because his principles apply to both of them. So whether you're trying to make a whole lot of money in something that's very simple like real estate investing, or whether you're trying to do something a little bit more complicated like buying and selling companies, the advice today is going to be key to you on all 4 points. Number 1, value investing. Buffett's core investing strategy involves investing heavily in undervalued companies with good fundamentals, then working like a consultant to boost the company's value over a long stretch of time. Like, let me give you an example of a company that we all know that's really successful. Apple. When you're in a recession, the value of all companies on the stock market, for the most part, goes down. So if Apple in a really deep recession loses 20% of its market value, does that actually mean that the company is less valuable? Or is it more that the market is in fear mode? They've been listening to the media. They want to hold on to their dollars. They're trying to cash out, stash some cash under the mattress. It's more of an expression of fear. The intrinsic value of Apple is still there. And when we come out of a recession, guess what will happen to that lost 20%? Well, it'll come back and then some. Now, that's not exactly what Warren Buffett's talking about, but it is an example that you can really grasp your mind around, that there are good companies out there that for whatever reason don't have all the value that's there. Buffett is really good at finding these companies, not 20%, but a lot lower under market value. And then he works with them and he offers some of his strategies, some of his knowledge, some of his experience, or he just knows that the company, given a little bit more time, is going to pop in value. And when they do, his investment pays out in spades. Now, for just a moment, I want you to think about value investing. If you buy an undervalued company, wait long enough, it'll pop up in value, you're gonna make money. I do the exact same thing in real estate. In fact, the greater the discount, the more money I'm gonna make. In real estate, we love to say that I make my money when I buy, but I realize my profits when I sell. And that means that if you buy the right kind of real estate with the right kind of ROI, you can absolutely crush it. So that's why value investing is the first tenet of Warren Buffett's investment strategy. Ben Graham, an economist and Buffett's mentor, said, confronted with the challenge to distill the secrets of sound investment advice into 3 words, we venture the motto, margin of safety. And when Warren Buffett wrote his book, Snowball, it was all about margin of safety. And here's what it basically meant. No one wants to take on unnecessary risk. So if I were to buy a company at a 5% discount, I have a 5% margin of safety. Well, If I bought the company 80% below market, my margin of safety would then be 80%. And what he basically says is, the bigger the discount, the greater the safety. So even though investing sounds really scary, that's if you don't have a really good sound strategy. His is to understand that the less profit margin, the greater the risk. So what do? You got to find companies, you got to go find real estate where the greater the discount, the less risk you have and the more money you're going to make. The third strategy has to do with managing your risk. And Buffett does talk about being a long-term player inside the stock market. And a lot of people think, does that mean that I should put my money in a 401k or an IRA or a mutual fund or an index fund? Well, check this out. Many people misinterpret Buffett's investment advice about investing in index funds. No one ever gets rich from Vanguard or the S&P. They are simply relatively safe places to park your cash until you find something better to do with it. In other words, Buffett basically says intelligently store your money in the stock market, but the moment you find a great value investment, something that you can buy under market, launch your money into that thing. One of the safe ways that I use a similar strategy is I'll park my money in, for example, a life insurance policy. It's a whole life insurance policy where they have to pay out a 3% guaranteed minimum and then a dividend of another 3, 4, 5%. You add that together and it blends out around 5 or 6%. And 5 or 6% is never going to get you rich. That's equivalent to a 401k or an IRA. But what it is it's a hedge against inflation. And right now we've got a lot of inflation we're dealing with. It's sitting right around 5%. And it's really a place to stash cash until it's time to pull it out, access it, and deploy it into an investment with far greater potential and upside. In other words, don't just leave your money in the bank account. You're waiting. If you've got equity sitting in a property, get a home equity line of credit and get ready to pounce on the right investment. If you have money in an IRA, don't be afraid to pull it out to do something more intelligent. After all, single-digit entry-level investing is more about keeping your money in a place where you can access it, pull it out, and then put it into something real. Psst. By the way, at the end of this video, I'm going to share with you my number one place to invest money that consistently produces a 25 to 35% annual return. It basically means that my money doubles every 2 or 3 years. And if you do that over a working life, you end up with millions of dollars. And no, the good news is you don't have to be as smart as Buffett trying to find companies to invest in. I've got something a little bit easier. The fourth secret on Warren Buffett kind of sucks because it's very, very difficult to imitate, but I'm going to share it with you anyway. Imitating a master. The role of Warren Buffett's business connections, capital, expertise, and patience cannot be underestimated in his success. That is a difficult act to replicate by yourself. But if you're going to read the books, if you're going to study him, if you're going to be where Buffett is, if you're going to read up on what he's doing, if you're going to follow him closely, he can be a tremendous financial expert for you. It's not the most practical advice because he's ninja smart. There's got to be a simpler way, and I've got that way for you right now. Warren Buffett made his fortune buying out businesses, but there are other types of assets like real estate investing, which offer similar wealth building potential without having to become an expert in so many fields. Over the last 20 years, I've been able to transact $2 billion worth of real estate. The majority of that I didn't buy on my own. What I did is I found other people, or rather other people found me through social media, and what I've been able to do with them is basically partner up. Often they're unsatisfied with their 401ks and their IRAs or even home equity that they have, and they start running some math and realizing, wait a second, if I want to retire in 5 years or 10 years or 20 years, I'm off track. I'm not going to have enough money. So what do? They get in contact with me and they basically say, hey, Kris, on your next real estate deals, if we were to partner up, could you do all the work if I supply the dough and then we split the profits? And I got news for you. That is my core strategy on how I help people become multimillionaires. And in the link below, you can read all about it and actually fill out a request to connect with me, my team. And if we end up partnering with each other, you do get my cell phone. We do connect with each other. Yes, I've got my team, but we're in this together. And I want to show you something really cool. Imagine that you had $50,000 in real estate earning 25%. How long would it take to become a mega multimillionaire? Well, at a 25% annual ROI over a 20-year span, that would grow to $4.3 million. Now, $4.3 million, that's enough for someone to start having what I would call a decent retirement. But I will tell you, a lot of my students, they like to be more aggressive. That's just based on buying one home. If you're in a position to buy 2 or 3 or 4 homes, you can do a lot more in a much shorter period of time. Click the link below, get in touch with me and my team, read some of the stats, let me show you the proof on our last several thousand deals, and who knows, maybe you and I will be partnering together. Kris, I don't know if I should invest in real estate. I've been taking advice from Dave Ramsey, and I'm really more focused just on getting out of debt, not going into more real estate debt. Well, if you feel that way, you should definitely watch this video right here, because me and Dave, we ain't gonna mince words. I'm gonna share with you the outcome of his financial strategy rather than working with me, and you decide for yourself.